Well. We knew it was only a matter of time before the drop, the dump. We had the pump, and now we have the dump. CCTG, the stock dropped over 90% today. And what adds icing to the cake on this one is that we knew it was coming. We knew it was going to happen. It fit the profile of all the other Chinese stocks we've recently seen that have had these kinds of drops. And what gave the confirmation was the WhatsApp scammer who told me himself or herself, probably himself, that in fact, this was the stock that they wanted people to buy. So for those of you guys that missed it, well, we'll look at the chart here and we'll talk about this WhatsApp scammer. There it is. You know, this could have happened yesterday. It could have happened any day, but we knew it was going to happen. So this is a stock that I got the WhatsApp text alert on it saying it was a buy way back here when it was at like, I don't know, $8 a share down here on this second day after the IPO. And, you know, it surprised me that it kept going higher and higher and higher, but I knew it was not trustworthy. Now, here's something noteworthy. It continued higher on lighter volume. That indicates to me that it was being sort of propped up. It was being held up. And as soon as selling came in, look at this thing. This is kind of wild how much it dropped. So let's look at this in a little bit more detail. Let's get the 1 minute chart up here full screen. Okay, so basically today it has pretty much no volume, right? It's just kind of going sideways, very, very light volume. And then all of a sudden it halts down right here. How much volume does it? Look at this. This is where it gets interesting. Right here, you see this candle? 364,000 shares of volume. But this is very interesting. It's on that candle there. Look at how tiny that candle is. That candle is really, really small. 364,000 shares of volume went through on this candle. Well, then this candle right here, all of a sudden, another 150,000 shares, and it halts down. It resumes, so it halts down at a low of $19.15. It resumes, it opens down here at 1069, down almost 50%, and halts down immediately a second time on another 150,000 shares. It opens again and drops again. Boom, another halt. It opens and now it bottoms out, hits a low of about, what was it, $3.11. And then it kind of goes sideways. Now, I'll give it to you. Those of you guys who don't mind playing with fire, you did get a nice bounce here. This was after hours. I wouldn't have touched it because I would have been concerned about the risk of a T12 halt and then getting my money just totally locked up. It did bounce, but then there's another dump. So it's a stock that simply was not trustworthy. We can look at MSS. This is another stock, very similar. The chart's going to look similar. It's only a matter of time. They make their way up, and then all of a sudden, boom, the liquidation, the rug pull, and they just get destroyed. Now, something that is interesting is ZJYL. ZJYL, this stock had basically, this is what happened on ZJYL before this. It was up to about $40 a share, and then on this day right here, it drops to a low of $11. Let's see if we can get the 5 minute chart up. It's going to be a little ways back. So it drops to a low of $5. What was the date of that? It was on December 18th. Let's see. So on December 18th, it drops to $11. There we go. Go to see if I get this to load. I have never tried using that before. That doesn't seem like that actually worked. All right. So nonetheless, this on December 18th, what happened was it was at $40 a share. It halts down once, twice. It halts down again, and then all of a sudden it halts up once, and I think twice, and then it opened at $500 a share and absolutely destroyed anyone who was shorting it. It was insane. And now what's incredible is this thing is still holding pretty well up around $300 a share. I keep expecting we're going to see a day where this thing drops in one day all the way down to like $10. I think some short sellers are probably thinking it too, but the longer it holds up, the more you kind of wonder what's happening. Now, this is right now 40,000 shares of volume today. Yesterday was 40,000 shares. It has no volume. But why isn't it dropping? Well, people aren't selling and people aren't buying. So it's just more or less holding steady. There could be a point where some shorts get squeezed out, but once again, I was shocked this didn't get a T12 halt on that day, and it continues to have that risk. If we look at BAM SEC, let's see, look at the stock MSS. So on this one, oh, let's see. I'm going to go back a little bit further here. So let's see who the underwriter was now. I can't remember. Joseph Stone Capital. Joseph Stone Capital. All right. So now let's look for 1 second at a couple other stocks Joseph Stone Capital's been an underwriter for. I'm going to do actually screening here. Joseph Stone Capital. EJH. MSS. Right? So EJH, you could look at that one. That's another one. It's just a pattern that we keep seeing, unfortunately, again and again and again. You see the move up. This one's at 47 cents right now. Look at how much it's dropped. This is what seems to keep happening with these Chinese stocks. So, you know, I knew this was going to happen on CCTG. I knew it was only a matter of time. And, you know, there it is today, and it's dead. There was a time where I felt much more comfortable trading. Let's see, underwriters, trading these Chinese stocks, but Joseph Stone Capital. But unfortunately, at this point, I just don't trust them. You know, I'm too concerned about being in a trade where something like that happens and you're just destroyed. It's not worth it long or short. It's really a shame that this is happening. But, you know, back in other parts of my career, we've had times where we got some nice moves on Chinese stocks, but the drops here that we're seeing, that's a little bit newer. You know, we used to get like this nice sort of ascension higher, and they would sometimes go parabolic and they'd make a big move. And then over time, they would kind of fade back down. But losing like 90% in one day, that is incredible. That's the type of drop that it absolutely destroys traders. Now, the funny thing, I don't know if it's a funny thing, but the thing about ZJYL is ZJYL, you know, felt like just another example of that happening when we had this drop back here. So like I said, this was at $30, $40 a share. And then all of a sudden on this day, you know, the drop came, right? So it was like, okay, we've already seen that this thing can drop. It dropped. It then came back up and then boom, it drops. So it hits a low here. It goes all the way down to almost $10. Like this was a huge red day. And what's insane is that all of a sudden it halted up and it opened at $500 a share. That was what was absolutely insane. So let's just think about that for a second. Let's just say you trade with tiny size and you shorted 1,000 shares. You could have lost $500,000. Let's say you shorted 5,000 shares. You could have lost $2.5 million. Let's say you shorted 10,000 shares. You're down 5 million. And you know, there's a lot of traders out there, especially short sellers, who average in on these and accumulate huge positions. So it shocked me that regulators didn't step in and do a T12 halt when it was showing a $500 resumption. At one point, it was showing a $700 resumption. I'm surprised they didn't halt it right then and there. Just like stop all trading. And, you know, if you think about GameStop and you want to be skeptical, we know on GameStop, the regulators stepped in when finally it was like Robinhood and the big firms who were up against the ropes. But when it's retail traders making silly mistakes, we don't get the courtesy of the rules changing and all of a sudden it's not going to halt, or, you know, they take away the buy button so it can't get squeezed out anymore. So in any case, even though it coulda, shoulda, woulda never happened, this thing opened at 500, or it hit a high of 500. And the people who lost millions of dollars on that trade, there's nothing they can do. What are they going to do? File a lawsuit? I mean, it's the stock market. We know it's risky. There's nothing you can do. The people who bought up here, then to watch it come all the way back down to $56, again, there's nothing you can do. So, you know, we had this crazy move, totally insane. And I think one of the things that I've said a million times, but I'll say it again here, is that you never, ever, ever, ever want to empower one trade to end your career. So in my career, so in 2017, I funded an account with $583 and I grew that account to over 10 million, but I didn't leave all 10 million in the account. Now, I suppose if my strategy was different, maybe I would have left more in the account, but right now I've got like $145,000 in my trading account. So less than 1% of my all-time profits is still in the account. So even if I lost all of that in one trade, which would be a big loss, I would still have 90% plus of my profit. And that's what's important. You see a tail wagging behind me? That's what's important though, is that you never want to empower one trade to potentially end your career. Unfortunately, with traders who are trading to the short side, with stocks like this, wow. With stocks like that, it can get scary. And, you know, I hate to think how bad it could have been. With a $140,000 account, you know, you could easily be in 10,000 shares of a stock like that. And you could easily lose $5 million. That's a nightmare. That's the type of nightmare that I wouldn't keep trading if I had that risk. It wouldn't be worth it. Why would I ever take a trade that could risk giving back that much profit? It's just not worth it. So for me right now, you know, yeah, I have some bad trades from time to time. My worst trade last year, I lost 10 grand. So, you know, and I've made over $10 million in profit. So like even my bad trades right now, knock on wood, are relatively controlled. It doesn't mean that I couldn't potentially, you know, get into a trade on something like a Nexi or a DWAC and size into it and really get smoked. I certainly could. Nexi was a pretty tough one yesterday. I know that one dropped quite a lot, but even still, I would rather trade this any day of the week with this type of risk than be in one of these, specifically these Chinese stocks that I'm worried about the risk of it dropping 90%. Because once it halts down, you're stuck. That's the problem. You're stuck. And now it's all of a sudden showing a resumption 50% lower. And there's nothing you can do. Now, yes, circuit breaker halts can happen at any time, but there's only a handful of stocks in the market right now where this is the type of risk we're facing. And they all have something in common. They're small cap Chinese stocks. It is what it is. It's a fact. This is a pattern. We keep seeing it. And you could say, oh, I'm going to short this because this keeps happening. And that's what a lot of people did. And then ZJYL happened. So now I think a lot of traders are just like, I don't even want to touch this. I'm not buying it long. I'm not trading it short. I am just going to trade other stuff. Because you know what? There's other areas in the market where I can make a little bit of money without potentially risking, blowing up my account. That's the type of risk that there's no ROI for it. The risk, it just doesn't make sense. That's not a career. You can't do that. So my strategy has always been about trading every single day, trying to generate some profit for income. And yes, I trade in a retirement account, but I'm still just like a little bit of profit, a little bit of profit, a little bit of profit. I don't want to take a lot of risk. I don't want to do anything crazy. I just want to be consistent. And although I think it's possible when you know a stock like CCTG is being pumped on, WhatsApp and these other places, you can profit on that. You can ride the momentum, but you've got to be careful because when the dump happens, and it can be unexpected, it can be violent. A drop like that, that's crazy. Now, one of the things I talked about, and I've talked about this, pretty extensively, is the fact that there are opportunities in the market that may not be quite as juicy, but consistency with them that's where it's at. So like NRBO, so I made $3,600 today. It's not a home run day, but these days add up. Every single day like this adds up at $10,000 every few days or whatever it is. This is fine. And doing it, trading a stock like NRBO, what was the range of the stock? Yes, it had range, but did it ever have the risk of dropping 75%, 90%? I don't think so. The biggest risk on this might have been, an offering. But even CRBP yesterday that did the offering, the stock is still at $27 a share. So it's more or less flat. In fact, it may be in play, if not later this week, maybe next week, because it's still holding up relatively well. It's a pharmaceutical company. They did an offering. They priced it at $19 a share, and the stock's holding up. So I'm a big fan of trading pharmaceutical stocks. They're risky too. A lot of them do need to raise money. They do offerings, but even with the offering risk, that for me is much more manageable and much more controlled than the pump and dump risk of a stock dropping 80% or 90% in one day. That's just something that I can't handle. So, as long as that's happening, I'm unfortunately going to be avoiding that sector. And it's tough to avoid a sector, especially, look, trading is hard and there's not a ton of opportunities necessarily every single day. So you've got to, you want to make the most of what's there. And then if you say, well, now I'm not going to trade anything that's Chinese, you're going to miss some opportunities. Some people will say, look, I'm just going to trade it. I'm going to be careful. I'm going to just get in and out. And that's what I've always done. But, having since seen a few of these drops recently and that crazy move on ZJYL, I just don't know if it's worth it. The only problem is there are going to be times where a stock hits the scanner, NXT or something like that. NXT, COUR. I pull it up and I'm like, oh, I like this. And I jump in and I don't realize initially that it is, a Chinese stock. So some of my trades will be so fast that I might end up trading them without quite realizing it. And, it is what it is. But if I have a good sense of something like CCTG, I'm not going to touch it. It's just not worth it. And, it's just about staying safe. So it's risk and reward. And if you're comfortable with that risk, and you think, well, there was upside potential here to trade it on some of these days. There was. We just didn't know what day this was going to happen. I thought this was going to happen at the beginning, but they definitely pushed it higher before that drop. So it's just the risk that once it halts down, now you're looking at a 50% lower resumption. Like all the buyers are gone. They're totally gone. So I think that also speaks to the fact that the buyers that were holding it up just disappeared. They're gone. They pull it. It's pretty shady. So anyways, I thought I'd update you on that. I saw it after hours here and I was like, whoa, there we go. Okay. Yep. It's an after hours mover because it's bouncing, but that was a huge drop. So I hope you guys tuned into the episode that I did on CCTG about a week and a half ago, whatever it was. It is an interesting episode. It talks about how these WhatsApp scammers are targeting people and everything else. So check that out if you haven't already. And, as always, just be careful. Take it easy. It's not worth it to make a big mistake. So just keep your head up and, keep your eyes open. Be careful. All right. That's it for me. I'll see you guys back at it first thing tomorrow morning.